Hey everyone, DayTraderRockStar here. It is Tuesday night, first day back into the markets after the Labor Day weekend. I want to go over a trade today that we had on the show. It was basically really the only trade. The market was kind of dragging down all day, and I was waiting for some setups, and I realized, instead of just jumping into things, continue just to wait for the setups, and that just goes back to the original philosophy of the HPS methodology, is to really have that key patience to see something happening before it happens. And when you do see that happen, you have a choice. You get into the market at any time. It's just a random thing. You just get in and try to make a trade happen, or you could wait for certain criteria to happen, and that criteria gives you a better probability. And lots of times you can notice that on any type of chart. You can just go back and reflect back. And one of the main things, of course, are my stochastic indicators. If I'm going to go long, I'm looking for a turn up off of an oversold level, or at least down into an oversold level, because I know that the majority of the time, once we get down to that level, I usually have a better chance of bounce. All right, so you could actually go back down here and take a look at areas that you would want to go, and you go, what's familiar with this area? Well, we have an oversold stochastic here. We have an oversold stochastic here. We have an oversold stochastic here. But we also had an oversold stochastic here. So what makes this area different from this area? And that's where you don't depend on just one indicator or two indicators. You really start to line up 3 or 4 or 5 indicators. And there's only really 5 major indicators you got to watch. That's all on the videos. So that's what we do on either of the time frames. You could do 5-minute, 60-minute, 15-minute. Basically, you want to see, you want to have everything line up perfectly to give you the best probability, because when a market pulls back, it doesn't go straight up or down. It actually moves in steps, and it has a rhythm to it. So if you could actually figure out that rhythm and know some of the signals that time you with that, you're able to time that rhythm with, then you have a much better position, or a much better chance of making money in that trade. So that's exactly what happened today. So I'm very proud to go back and just take a look at this Caterpillar trade, because we did notice that, and I'm in the room, we're in the room, a lot of traders are throwing out stocks, and that's important. We're working as a team. Until we get something that seems okay or falls into the pattern. And, Caterpillar was good, because we noticed Caterpillar was dropping out, it was selling off, but we also knew if we looked out on it was on the 15-minute chart probably. I didn't even write it down. Chart just went out here earlier, but we just wanted to establish that trend line. Once you were able to start to see some of the levels kind of lining up here, then we knew that at the point where we were here, all we had to do was wait for that price really to get down to here, to this trend line, and most likely, just because this was oversold and this was really embedded down here, but it really didn't pop until it came down to this trend line, and that trend line really is established because of these 2 other pivot areas, and these 2 other pivot areas also giving us those oversold levels. So once you have an established line, then you could trade off of that. That third point, we always talk about the 1, 2, 3 method of determining a channel. Well, the key to that is having 2 points on one side of the chart. And that 2 points actually makes a straight line. So once you have 2 points, you could trade 3, 4, and 5. Once you have 3, just wait for 4. And that was the key here. It's just having patience to wait. We knew that the stochastics were oversold on the 15. We looked at the 60-minute chart. We also knew that the stochastics were oversold on the 60-minute chart. And we came right down to that level. And it worked out perfectly. Got in. It was a scalp. It was meant to be a scalp. If it broke down here, it actually flushed out a little. But because everything was lining up and we had readjusted those trend lines, it really didn't flush out too much. It didn't flush out any. It actually just moved down down to the trend line. It was more of having an earlier entry. But the entry was sound. At 82.52, the entry was. And we bounced back up here above 83.50. It really moved up over $1. I was able to take 50 cents on it. I know a lot of people in the room were able, but that's what you're here for. It's not about how much you're going to get. It's about having the best probability in your trade. So that's something we keyed in on, and I want to, that kind of motivated me today. I started getting a little more excited in the market because, sometimes you have to wait all day for something to set up, and sometimes nothing's going to set up, and it's really up to you to kind of like realize that and not try to force yourself, because you force yourself outside the methodology, your probability goes down. And having a probability go down, it's just like anything else. The chances of making money are also going to be going down. So that's really important to establish that and understand that, hey, if there's nothing really here setting up that I could really see, and seeing it means seeing is believing. This is very pretty to see. You know exactly where you want to get in. You know why you want to get in. You know what you're looking for. So if you don't see it, you're out. And if you see it, you got a good profit. The problem is, this happened here on this happened here on the 28th, and this happens on the 9th and the 4th. You might be looking at the day, and this might be choppy. And I don't want to be in this market like this. This is what I want, the multiple indicators lining up. So the object here is to cover enough stocks, enough high-quality stocks. HPS, I call it the HPS, list of stocks, which we just rotate, and when they come into play, and we start to see to recognize the convergence of the different indicators, that's when we put it on our list, and that's when we take the trade when it hits it. Simple as that. I'm not going to make the video any more complicated than that. I think this is the key to really making money in the market. And we always talk about discipline and patience and greed and all these emotions that come with the trade. Patience has to be up there fighting in the number one position, because without patience, you're in the market way too much. And I know a lot of people out there, trade automated systems, and a lot of them will give you, get you in and get you out, and it's about it almost comes down to the amount of time you spend in the market. You want your money working for you. You don't want to just be in here and chopping around and then holding it down here and trying to recover. You want to be in exact levels, So it's okay that you're only in here today and you're out today, because the rest of the day might go sideways and then push back down. But this is a trade you wanted. This is a trade you waited for, and this is a trade you took, and you made money on it. And that's the key, all right? That's the true key of trading. It's a simple video. I want to get it out to you. Let's just take a look at the S&P cash chart. We're in a situation where there's a lot of news out this week. We have the ECB rate decision, or what they're going to explain maybe the bond buying program. That's going to be coming out on Thursday. We have ADP, I think, on Thursday, and then we have non-farm payrolls on Friday. So there's a lot of major indicators, economic data points coming out this week, and it's going to maybe move the market. The 60-minute chart is starting to coil up. I mean, we're starting to see a series of lower highs on the stochastics, and we could actually just throw this in, and this is really a coil. So, the chance of a pullback and finishing this coil, which would be kind of bullish, but the chance of an early morning pullback tomorrow, and then again, if we get an early morning pullback and a fast pullback, then we have a good shot of a rally, I think. Either way, anything can happen in this market because of these events. If we take a look at the daily, the one thing I'll point out is that, my main indicator, the stochastic, is getting back into an oversold level, and this trend is really strong to the point where we're oversold very quickly, and we're still holding off of recent highs, or recent, higher highs and stuff, and higher lows. So it's really, it's coming into a nice divergence. We're pulling back. We're oversold. We're holding the 50. We're holding the 20. I put a couple numbers up here, 1396. That's the recent low. I'd watch that number. The next level would be 1384, which is the 50-period moving average, and then 1374, which is this underlying trend line, about give or take a point on each of those. So those three important levels to watch. I think this is a major setup here with the stochastics, and just as buy triggers, and there's going to be more and more people coming back into the market. We're going to see how this signal plays out, even in the face of the overall, data points that are coming out. I'm very curious to see the next 2 days. Again, patience, discipline. If we don't see a trade, you don't have to trade. It's all about waiting for that really good setup and taking advantage of it when it comes. You want to see some stocks that are ready to set up? Again, I'm going to be on the radio again tomorrow. I'm definitely looking for something to happen at Capital One Finance. It's been coiling up here. I mean, the price range is getting tighter and tighter. We had that big range bar to the upside, and we kind of just drifted here. We're holding the 20, but when you get something all wound up like this and tighter, usually it resolves itself to one way or another. This is so close to 52-week highs. I still like it a lot. I'm going to be watching for this thing to pop soon out of this area. And CATM, I was banging the table after during the close. This stock has pulled back. Now this stock has pulled back, and I don't have the 200 period moving average on this, but the stock constantly comes down to the 200 period moving average. Let's see if I can bring it up here fast. I think it's important enough to see, because let's see, exponential, apply. Let's go with the color red. Let's set a default, apply, boom. And then we have the 200 period moving average in here. So you can see how this stock has pulled back and dropped out every so often. In some cases we're just going to go out to here, so it's not that bad. Some cases we didn't drop all the way to the 200 period moving average, but in each time we dropped out, again, we had the convergence of the oversold level, and what we're really keen in on is those reversal candlesticks. So in each one of these cases, we have a drop down and a reversal off of pullback. There's been a nice candlestick that was accompanying that push back up. All right, even this was it was a negative candle. The next day it was a pretty decent candle. But as we continue on and look at major levels on here, we have a nice, beautiful candlestick right now. Again, same level, oversold. Again, these are all levels that bounced that were oversold. This one wasn't. But, you could just go back. When you see that combination of an oversold level, a nice reversal candlestick, usually the next part of the trend is going to be up. So this, if this is a huge bar, volume was okay, but it was a huge bar, and I would look for, definitely some follow-through off of this tomorrow on CATM. Huge volume. BHI is starting to look interesting to me. I like the pullback. There's a thing called the tweezer bottom. It's not really a textbook tweezer bottom where we have a similar candlesticks that make the similar low, but we do have these tails that are being put in. We have an oversold level. We have BHI, which is a natural gas stock, and we also have this recent support line over here. So there's a couple things that I like about this. The potential of this trying to go into a channel. Then I would say, watch this 44.30 level, which is the kind of that gap low, and it just looks interesting down here. I'm going to watch it. There's nothing really jumping out at me as a multiple indicator setup, but it's something I'm going to start watching. The Baidu, which we recently traded last week on a similar situation, and again, all that setup here, today's setup, again, we could also go back out to Baidu, and you can see that Baidu performed the same way. When we took our trade in Baidu, which was around, I forget what day it was, but it was basically what we call a trend line pullback stochastic bounce, meaning an oversold stochastic level and an underlying trend line in a downward channel. So you have everything, those three main indicators, and the channel is pretty good. But the lower trend line and the oversold stochastic was key here. And again, we took this trade on Baidu last week at one point, and it was just a great trade. So it's just again. Now we're just continuing to watch it. You can see the 60-minute right now is a little overbought. So I'm going to start watching this. It's starting to put in some good range. So I'm actually going to start to pay attention to see if we do have any type of channels that start to form. Just going to keep an eye on it. I'm starting to like Baidu a little bit better. And TYC is the last one I'm going to talk about. Why am I talking about it? I think it has a nice little flag. It's just recently off the lows. I'm curious to see if this is going to flag out. So these are some new stocks I want to start watching. Nothing really exciting. Nothing like the Caterpillar today or the Baidu last week, but the Capital One Finance ready to go. And I think the market's, again, very close to giving us that really good buy signal on the stochastics. We're not quite oversold yet. But again, on that 60-minute chart, what I'm calling for is maybe a possible little pullback in the morning. See if we could actually hold pretty much this channel and then get a nice rally out of that, because everything will be set up. We'll find out how fast this turns down, and if we actually get that daily setting up, there'll be a dual stochastic setup. If the price ends up coming down this way, just looking at building the chart out, just in case we're looking at an area down here, I would say, just by educated guess. 1287 looks like 1287. I'm going to go back on the daily. I want to zoom in a little. Yeah, 1287. So we have the 1284, which was the 50-period moving average. So that'll actually rise up also as the trade gets closer to it. But overall, I would say more bullish than bearish right now. I think the news factor is an issue, but the chart pattern's not. All right, I hear some music in the background, so I'm going to call it a night. I don't know what that is. But I'll see you guys in the morning. I'll see you on the market, daytraderradio.com. I'll see you then.